So what is Wyckoff? The Wyckoff schematic is an accumulation process of how big entities, or in Wyckoff terms, the composition met, enter the market. Huge market orders commit increments to not upset the current state of the market and to avoid being predictable. So again, if the market only consisted of buying or selling, it'll be too easy to make money. It'll be too predictable. So instead, the orders are injected via accumulation process, which would be your Wyckoff schematic. And the Wyckoff is a part of the accumulation where we can read, which is visible to our eyes, something that we can predict. We can predict the breakout, go into direction, and enter the market pretty early. So let's talk about the basic Wyckoff schematic. So here you have your buying climax. What is the buying climax? The buying climax is the end of buying. So let's say the market was previously bullish, and this is where the buying orders come to an end. And here comes in automatic rally. The automatic rally confirms the buying climax. Why does it confirm the buying climax? Because it pulls away. It shows a significant sell pressure coming in. That means sell orders are slowly starting to be accumulated. Here you have your test. What is your test? The test is a rejection from your buying climax in a simple schematic. Price rejects from your buying climax. Then comes your purge. What is your purge? That means the market drove price past your buying climax to take out any sell orders. Well, the researcher was predicted. So let's say somebody can anticipate that a market reversal is coming and they spotted the buying climax in the test. They would try and take another entry post the test. So the sell side, what the market would do is trick you out one last time by going for your stop losses, which would be your purge. They would take out any liquidity resting above the buying climax. This would be your RTO, your return to origin. Price retests the origin. Again, one more fake out to induce traders into taking a bullish direction, because they would look that price came back into the range and it drove back up towards your purge. So a return to origin. Here comes your sign of weakness. When structure breaks post your return to origin, this shows that sell orders are coming in the market. The selling pressure is starting to come in, and this will be your sign of weakness. A consolidation right before the breakout is your last point of support. This is the last thing that must happen before price breaks out of your consolidation to fully convince you that price is going bearish and is no longer bullish. So let's talk about the basic Wyckoff schematic in case you were confused with the first demonstration. So here you have a bullish cycle. Again, if this was to be considered your buying climax, the main thing here is it doesn't have to break your structure here. That is not the confirmation for a buying climax. The confirmation is that price reaches your discounted level. What is your discount level? It's your high and low breaking into 4. So if it reaches the bottom quarter, then price reached a discounted level. So that can be the first clue that confirms that this is a buying climax. Now, what's your second clue? Your second clue here would be the size of the move. So the fact that the market was in a bullish trend, you see this huge selling pressure. And compare this sell move to all the previous moves to the downside. So you had a sell move here, you had a sell move here, and you had another sell move here. This move is much greater than all these pullbacks. So that's the second clue that would indicate that this might be your buying climax. And of course, when it comes to your Wyckoff schematic, you're more than likely to predict this schematic perfectly in the later stages. The earlier it is, the more risky it is. So here you have your buying climax. So now let's look at what happens next. Price would accumulate on the micro timeframes and head for your buying climax. And you find a rejection. What does this rejection indicate? It indicates that there was a rejection from the buy climax. That means that there was a supply level here that pushed price down. And of course, you had the smart money trap here, which would be your inducement. This move here is called your test. Now again, you always want to think as a retail trader. If you're trading supply and demand concepts or even smart money concepts, this is where a lot of people's entry would have been. They had their inducement and they had their purge, which went straight to a supply level, which would be your extreme order block. So your rejection here, anybody that sold price right here, their stop losses would be right here. They would be above the buying climax. So what does this indicate? This shows that anybody that sold over here at this entry here, their stop loss is here. And of course, the market doesn't want you to take advantage of the entire move. So let's say this is a reversal. The market wouldn't want you to take advantage of 100, 200 points. It needs to come back and equalize you. So now what happens next is price will reach for that test level by a compression, which will make traders panic. And then you would see an expansion taking out your buying climax. So now this is another trap. This trap here would be a trap for all your support and resistance traders. They would think that price is breaking out, and what they would ideally look for is price to continue to the bull side because they see a breakup structure. But what does price do instead in your accumulation cycle? Price will come back into the range. Now, when price comes back into the range, this is a purge. And again, why is it called a purge? It's a purge because it purged all the stop losses laying above your buying climax. So anybody that sold here, their stop losses were right here or even right here, and the market comes back and purges them. So now what happens next? Price comes back into your purge. What do retail traders think here? They think that this here is a breakup structure. They think the purge was a breakup structure, and price came to a demand zone, a demand order block somewhere here inside, or it could be a breaker. So now this is another trap for buyers to get in for traders to get in a buy position. And now they think price is going to continue higher. Why? Because it retraced and it broke structure, even though they completely ignored everything that happened before this, which is your Wyckoff schematic, right? So what happens next? Price rejects and breaks structure. So when price breaks structure here, price come back into the range and then rejects again. This would be your sign of weakness. Why is this considered your sign of weakness? And 1 second, missed marking the RTO. Okay, let's get back to this. So why is this your sign of weakness? Because price came back into the previous range. Price came back to the previous range, found sell orders to reject and break structure again. This shows that there is weakness coming in. Selling pressure is starting to pile up, and it no longer is in a buying profile.
So now, before exiting your accumulation, price will try its last trick, which will be your last point of support. Your last point of support will be a consolidation back into the range, and price will accumulate right here. What is the purpose of this accumulation? This is basically your last support. This is the market trying to trick you one last time before going the intended way. They're trying to make it seem that price came back into the range here. Price came back into this range here, and then formed your micro range and came back into a demand zone and expanded again. And they're trying to induce you into taking a long position. Why are they trying to do that? Because the direction has been set and price is going to continue. It's going to change direction. And instead of going bullish, now it's going bearish. So this is their last attempt of stopping you. So this is what we call our last point of support. So once this accumulation is done, price will continue to the bear side. So here's an in-chart example for your basic Wyckoff schematic. So here you have your selling climax, and here you have your automatic rally. Again, look at the move provided to you by the automatic rally. The move to the bullish side was much greater than any previous move to the bullish side, and it formed your initial range. So your selling climax and your automatic rally is what forms your initial range, which later on leads to your rejection. And your rejection is your test. What happened during your test? Price was purchased. Price was purchased at an extreme demand level, which would be your demand micro order block. And anybody that purchased price here, as far as retail trader goes, their stop losses go beneath. So this is where their stop losses would be. So later price comes through and purges. After price purges, price takes out all the liquidity of anybody that purchased price at the test. So where their stop losses were, it got purged. So after the purge, price will come back into the range and reject from your purge again, which will be your return to origin. Your return to origin is when price comes back after an expansion into your range to use that. So here's another example for a basic Wyckoff schematic. So here you had your selling climax. Again, what's the clue that gives it out here? Look at the buy move here compared to all the previous micro buy moves. Get a micro buy moves all across the market on our bearish trend. So this is the first big move compared to these. So what did you have next? You had a rejection from our demand. What does that mean? That means if anybody bought here, where would their stop losses be? It would be beneath the selling climax. So once this happens, you can anticipate a purge. So now that the purge occurred, you can, of course, try to find the entry within your micros of your purge, so in the lower time frame of your purge, or you could wait for your RTO. Now, where would the RTO be? Your RTO would be returning back to origin. And next thing you want to look at is your order blocks. Any demand level that crosses or inside of your purge. This demand order block crosses within your purge zone. So let's say this is your purge. Of course, the highest quality would be right back at the purge, but if it crosses within your purge, that's completely fine. So here you have your purge, and this order block, this demand order block here crosses with your purge. So you'll be looking for an entry here. Let's talk about the advanced Wyckoff schematic. So same thing so far. You have your buying climax and you have your automatic rally. But the main difference here is instead of rejecting from your buying climax extreme, price will stop hunting, run it through, and then come back inside of the range. But this wouldn't be your purge. This would still be your test. Why wouldn't it be your purge instead of a test? Because price needs to test first. So the fact that it didn't react from the climax and went over, purged it, and came rolled back in, this is still considered a test. And later on, price will still be incentivized to run through that test and come back in the range and properly purge to then continue lower. So let's go over the advanced Wyckoff schematic. So again, let's say you have your bullish structure and you had your climax. Had your buying climax here and price rejected. So now, instead of rejecting from, rejecting from your buying climax here to form what would say a test and then continue lower to later on purge, price would run through it. What did that do here? That took out all the supply and demand traders. So now that all the supply and demand traders are taken out, price comes back inside of the range. So what happens when price comes back inside of the range? When it happens out of the range, now you have your test. But not only you have your test, you have a fake purge, a fake stop hunt, a fake turtle soup, or whatever you want to call it. So now you have a fake purge here. So what does this do? This now is a trap for all. This is a trap for majority of smart money concept traders. Why? Because now smart money concept traders anticipate a return to origin to then take price lower. But what happens instead? Price takes out that test and then comes down, forming your what? Your actual purge. So now when price does return to the actual purge, price will reject and continue lower. Well, here's an in-chart example for your advanced Wyckoff schematic. So here you have your selling climax and look at the move to the bull side from your selling climax compared to the previous move to the bull side. This move is much greater. Here's your automatic rally, but look at your test. Your test did not reject from the extreme. So if you pull out your extreme, you would have been initially looking for a rejection somewhere here. And even though price did try and reject, as you can see through this wick, price went lower. So what are you waiting for now? We're waiting for our test to be taken out because this is now a fake RTO. So when price does come down low, takes out that test and comes back into the range, now this is your purge. Now what you're waiting for is your RTO. So before we can anticipate the direction of our Wyckoff schematic, we need to understand structure. And we're going to go over this really quick since I covered this in previous videos.
So here you have your supply and demand structure. So supply and demand structure is when price breaks structure here and then comes back inside of the range, which would be your previous range. Same with your second phase. Price breaks structure, then comes back inside of the initial range. And whether it reaches your discount level, here or reaches your 50%, as long as it comes back inside of the previous range, which would be your previous high and low, this will be counted as your supply and demand structure. Again, one more time. This is called your supply and demand structure. Price forms a swing, breaks that swing. After it breaks that swing, it comes back inside of the swing to find more buy orders to continue higher. And same thing, the opposite direction. Let's say it was a bearish market. Price break structure here. Instead of continuing lower, price comes back and looks for orders within your range, which is your swing high and your swing low. Price finds more sell orders, break structure again, comes back inside of the range, finds more sell orders within your range, and then continues lower, and so on, so on. This will be your supply and demand structure. This is very important as we continue. So now let's go over our support and resistance structure. Support and resistance structure is basically this would be your support and resistance structure. What is the difference between the support and resistance structure and the supply and demand is the fact that when price breaks structure, it does not come back inside of the range. It rejects from the peak of the range or rejects right above. Same with here. Price break structure, but rejects at your peak. Price break structure and rejects before or at your peak. It does not come back inside of the range. So the main difference here is in a supply and demand structure, once price breaks, it has to come back inside of your range to continue higher. But when it comes to your support and resistance, price does not have to come back in the range. Once price breaks structure here, and this is your existing range, price does not have to come inside here. Price can just reject from the peak. So here's an example of a macro and a micro supply and demand structure. As you can see here on the macro, price is rejecting from your supply zone. And you can see the same thing duplicate on your micro. So what happened here is basically a mere reflection of this. So to optimize your Wyckoff strategy, you would want to trade within a direction. So let's say once price approaches your supply level right here, you would want to look for a bearish Wyckoff schematic here. As price drops down, you would want to look for a bearish schematic here. When price is out of the range, as you can see here, so let's say as you can see, price is in a supply and demand structure, but price came out of the structure and price is below this structure. So what you have as a reference point is price is previously moving in a supply and demand structure. So what you can anticipate is for price to pop back in. So a reflection here would be price came out of the range. Once price comes out of the range, it comes back inside of the range. You're looking for a bullish Wyckoff schematic to take price back to your supply level right here. So that's how you would optimize it. So right here, you're looking for a bullish schematic. Once price expands again, you're still looking for a bullish schematic. But once price rejects from your extreme supply, you're starting to look for a bearish Wyckoff schematic until price reaches this level. Why? Because as you can see a reflection of here, price is moving in a bearish supply and demand structure. So let's go over this one more time. So let's say this is current price action. what do you see here? First thing you want to do is you want to locate your range. So this would be your low, and this would be a previous high. Now price came back inside of the range. Let's say price is somewhere right here. What are you looking for? Let's say previously to this, price is bearish, right? Price is bearish. So what are you looking for? First thing you can anticipate is if you plot your high and low, you can mark your extreme zones, which in this case, you're mostly focused on your supply zone. So you know that price is targeting this level, or at least aiming to target this level. So if you are looking for a schematic, you would be looking for a bullish schematic. So let's say price expands here, then gives you a climax, test, comes up, purges, and retraces back to an RTO, then expands. This would be your entry. And you're holding the trade until here. Once price get to here, now you're starting to look for a bearish Wyckoff schematic. So let's say a test right here, a purge, RTO, and you're trying to take price all the way back down. So right here. Why are you trying to take it down here? Because the macro structure is bearish. This is the structure. So let's take a look at this chart example. So what do you see here on your macro time frame? In this instant, this is our 12-hour. So what we're seeing here is clear bearish structure. We can see a reversal occurred here. Price broke structure, came back to an extreme, and now broke structure. So now that we have this clue, we can anticipate the next move to be a supply move, and price moving in a supply and demand profile structure. So what we do know is this is our low and this is our high, and you always have to work with the clues that you currently have. So this is your low, this is your high. So now you want to mark out your premium level because you're anticipating a reversal here. So now that you have your level, you want to go on your micro time frames. So in this case would be the 1 hour. So what we want to see either a bullish schematic, which in this case it already occurred, right? If you go on the super micro time frame, which would be in this case we would go to the 15-minute, you can see that what occurred here was you had a climax, you had a test right here, you had a stop hunt, you had a break of structure, you had a return to origin, and an expansion. Of course, your entry could be at your return to origin, or once price breaks out there, retest back. This is where your last point of support happens. So this already occurred. So what are you looking for now? You want to ride the trend. You want to be in line with the trend. And the overall trend is bearish, like we said on the macro. So we are looking for a Wyckoff schematic to occur, but it has to make contact with our premium level. And again, I'm not against going counter trend because a bullish schematic did present itself here, and you can trade all the way from here to here, or from here to back down here. So either way, I'm not against going counter trend. Of course, the probability are more in your favor when it is in line with the trend, but nevertheless, a bullish trade here would still be a good trade. So let's look for a schematic. First thing we want is a valid test. So now what you do, you mark out, since you have a strong move to the downside, you want to see if price rejects from this level. If price does reject from this level, now we can count this as a test. Price broke through this level, so we still wouldn't consider this a test. And the reason is because it's still, if a purge does occur, we would want the purge to occur closer to our premium range. We're still in equilibrium. So let's see. Now, what we're looking at is if price is going to stop on this level and come back inside of the range. Okay, now we have a valid test. Now we have a test here. So now we can anticipate a stop line, preferably for a stop line to happen somewhere here, or at least get close by. It doesn't have to make direct contact, but at least close by. At least take out this external level right here. See if price comes back into the range. Okay, price makes contact and comes back inside of the range. So now what we're looking for is a return to origin. So again, let me just mark it out. We have our buying climax right here. We have a test here. And we have our purge right here. So what we're looking for now is a return to origin. Of course, this entire thing is our purge right now. And our return to origin should be an order block inside of the purge or crossing by. This is the only order block available. So you're looking to take a rejection trade from this supply level all the way back down. So right here. Why? Because remember, on the macro, this is occurring. And we're trying to take price below this level so we can take price back into this level. And so on, this basic market structure. No need to waste a lot of time on this. So now you have your rejection, and this is where your trade was, and your TP is right here. And if you look on the macro, this is what happened. Exactly what I explained previously as far as the macro goes. The macro structure is at the reversal. Price came down, rejected from a supply level. That means the next move is more than likely to be from a supply level. Have a rejection here. Price going to go down. And now you're still looking for price to maybe form a bullish Wyckoff schematic to take price back inside of the range, and then maybe a bearish schematic here. So this is the highest probability way to use your Wyckoff schematic. So the question here is, how do you differentiate if you're looking for a simple Wyckoff schematic to an advanced? So the easiest way to do this, and it's not as hard as you think. First thing is, let's say this is your buying climax, right? This is your buying climax. Now, price took out your buying climax and then came back inside of the range. So now you would think this is your test. So far, you're right. This is your test. Now, what you're looking for is for price to take out that test, because we know the next step is the purge. But let's say price drops a little bit and then comes up here and rejects. What does this mean? That means that this is no longer your test because price did not run through it. If this was a test, if this was like an actual test, then price would take this test out and commit your purge and then come back inside and sell the other direction. But the fact that price comes up here and rejects, that means that now this is no longer your test. This would be your buying climax. And now this is your test because of the rejection. So now what you're waiting for is for price to purge your buying climax. So initially you thought this was a advanced Wyckoff schematic. But once price proved itself, once price didn't take out your previous test and rejected from the internal test, now you know we're back to our simple schematic, and now you're waiting for price to take this level out, take your buying climax out, return to origin, show you sign of weakness, consolidate, and drop. So let's go over this one more time. And let's go over this using our path. So far, you think this is a buying climax. So far, you think this is your buying climax. Now, price takes this level out. Once price take this level out and comes back inside of the range, what are you thinking? You're thinking this is an advanced Wyckoff schematic. So this would be your buying climax, and this would be your test. So this is what you think so far. Now, let's say price doesn't take out this level and purge it, right? Let's say price rejects instead of taking. And this is where the clue is. So let's say price comes to the extreme of your test and rejects. So now what does that mean? That means that this is no longer your test, because if it was your test, price would have took this level out. So now this is your test. This is your buying climax. So for your RTO entry, or your last point of support entry, or even your sign of weakness entry, this context really matters, because you're waiting for the right time, and what you're waiting for mostly is your purge. So now you can wait for price to take your buying climax out, come back inside the range, return to origin, break structure, retrace, find more orders, share that sign of weakness, consolidate, and drop. And of course, your entries could always be, your entry could be that RTO right here. Another entry could be your sign of weakness, and you can have another entry as a retracement with your last point of support. So here's an example of support resistance structure when it comes to the macro and your micro. So it's basically the same concept as our supply and demand structure. So you're looking to trade in line. So again, you're focusing on the range. Everything comes back to the range. Focusing on the range. The only difference in a support resistance market is that price does not come back deep inside of the range, right? So what I mean is, let's say price breaks structure right here, and now this is your range. Price does not come back deep inside the range. It will just get to the line or a little bit above it and then reverse. So this would be a support resistance market. And you can see it here on the micro, right? So this, in this case, this would be your low and this would be your high. Price breaks, rejects. Once price rejects, now you can say the previous low is your low and the previous the current high is your high, and when price comes back down, you're waiting for a reaction from your support resistance line. So it's exactly the same concept we used in the previous chapter when we talked about supply and demand and how to find order blocks in a supply and demand, not order blocks, Wyckoff in a supply and demand market. It's the same thing here. Just the only difference is you're looking for your Wyckoff to occur in line with the trend, just like the previous one. But the only difference is you're looking for your Wyckoff to occur at the line, right outside of the range. You would want your purge to make contact with the previous range, not a deep contact where price goes to the equilibrium here or even goes to your premium level here. You just want contact with the previous range. I'm going to cover this all the way at the end when I cover my live trade. So another way you can use your Wyckoff schematic is to use it as an entry confirmation. So let's say you have a discounted order block here. So let's say in this case, this is the 1 hour. You would go on your micro where you can see clear delivery, which would be, let's say, the 5 minute or the 1 minute, or maybe even the 3 minute. And you would want to see a Wyckoff schematic form as price approaches your order block, right? So you want to see a climax, you want to see a test, and then you want price to take that out and then return to origin, and your entry would be at your return to origin. This way you can confirm your order block. But the only bad side here is a lot of times this doesn't happen, right? A lot of times, as you guys know, and we always talk about this, the clear reaction for a high quality order block is usually price will approach this level, compress, go for a stop hunt, and then continue the opposite way. A lot of times you won't get a Wyckoff schematic here, but if you're comfortable trading Wyckoff schematics, you should try out the Wyckoff confirmation method. So as a bonus, I'm going to review the huge trade I had this week. So what made this trade really high probability for me is, first of all, look at my selling climax here. My selling climax here, look at the down move. Not only price had a significant push down all the way down here, it broke structure after a compression. So this was really huge as far as the fact that price broke structure, and even though it broke structure, it never rejected at my current test. And the small micro rejections here showed the price did want to initially continue lower, but failed. So when price actually did purge and came back into the range, all I had to do was wait for the return to origin. And the price came and purged the previous structure. And this is very similar to my ETM trade, my signature trade. When price comes out of the range, it comes back inside of the range, and that's where the purge occurs. So this was our previous range, right? This was the high, this was the low, and when price broke structure, it did retest it here, but then continued lower. But when this purge occurred, it came back into the previous range. So that was the second clue. So again, my purge happened within the previous range. And if you look at the previous structure, when you go on the micro time frames, price is bearish, right? And if you look even closer, it took out a major macro structure. So this is hanging out at the bottom. So the fact that this purge happened at 2 time frames, which happened on my micro, outside of my micro range, it also happened outside of the micro range. And these trades don't happen that often. They only happen once a month. But when they do happen, they're extremely high probability. I would say somewhere in the 75 to the 80% strike rate. So when it does happen, you kind of have to go heavy, and that's why I went heavier than usual as far as my lot size is concerned. But again, this is very similar to Wyckoff, and a lot of the Wyckoff concepts are used here. Of course, my climax here, my purge, and my return. My entry was at my return to origin. If you enjoyed this video, make sure you like, share, and subscribe, and make sure you follow me on Instagram, and make sure you visit our website.